Welcome to the weekly swing low. It's June 1st, 2025. So, first day of the month, we have complete monthly candles and just bigger picture, broader market. Looks like it just came out of a daily cycle low. And we'll start with Bitcoin here. So, Bitcoin is a little different. This is actually the ratio chart. But if we look at the absolute chart, we've been talking about this for a little bit. Or last week, we talked about how we had a swing high back on day 45, right? So this is the day, that's Thursday, May 22nd. We made our all time high, $112,000 based on Coinbase. You'll get different prices, different exchanges. The low for that day was 109,217. We actually closed below that literally the very next day. Right? Like you can see this big red candle here. That was your closing price, this line here. So we closed well below that. So again, that number is 109,217. And so since that day, we've just been basically consolidating at the lower end of the range of this big candle here. Right? You can see this day, 1, 2, 3, 4. And then we finally made a move down to make a lower low. So if you think about it logically, now the low of this candle, this big red candle, becomes an important line in the sand. So the low for this candle is 106,800. So a move back above that level is very actionable. It also happens to be the high of this candle here. So notice how price consolidated here, like in this area for like a couple weeks actually. And then we have this big candle that probably took out some stops anywhere in this area here, and then whoop, resume back up. And again, this candle here makes its low right at the high of this candle. Not a huge surprise, because this is basically the top of this range here, right? Like markets move from ranges to trending. And so if you think about the daily cycle, if this is day 45, that makes this currently this today. Well, actually, let's just double check that. Yeah. So that makes yesterday day 54. And what you'll notice is we're trying to make a swing low. I've mentioned this in a tweet. Given where we are, we tend to see cycles, the daily cycles around 60 days. The next daily swing low we see is probably our daily cycle low. Doesn't mean it will definitely be. There are no guarantees in markets. But right now, we've made a low here as of yesterday, the Saturday candle. And the high of that candle is 104,965. So call it 105,000 basically. We are now above that. We're here at $105,062, right? And so as long as price can close above that level today, Sunday, we will have our daily swing low and our probable daily cycle low. Now, it's totally possible we roll over and make another lower low, but given where we are timing band wise, the risk reward here is actually pretty decent. The low of this candle here is 103,110. So you put your stop somewhere around there. The other thing I would call out though is that I would have expected this to actually make a move closer to 100,000. So that's this line here. So notice this big candle here, right? Price consolidated within the range of this big red candle for 1, 2, 3, 4, 5, 6 days, and then it tried to break out this day 7, didn't quite make it, but then we got acceleration after that, and so it wouldn't be surprising to see price come back into this range, the range of this candle, and even make it to the low of that candle, which would be around 100,000, even maybe even a false breakdown. So totally possible we even get a swing low today, and then we go on and make a lower low. So you have to be nimble. There are no guarantees, but the risk reward is really good here. If we can make it down to 100,000, even better risk reward. Again, assuming we see a swing low once we cross below that. You always want to wait for that swing low, and I would say if before we get a swing low on the daily chart, we're gonna have to have one on a lower time frame. So let's look at the 4 hour. So we actually already have our swing low on the 4 hour chart. So this is the candle that made the low. Is that right? So right. So this candle here is marking that low at 103. Yeah, so this candle is marking that low at 103,110. And so the high of this candle is 104,334. So I'll just put a line there so it's easier to see. So actually, once price closed above this level here, we have a swing low on the 4-hour chart. That's one of our first steps. In order to have a swing low on a certain time frame, you need to have swing lows on the lower time frames. So you can't have a daily swing low without a 4-hour swing low. And you can't have a 4-hour swing low without an hourly swing low, 15-minute, etc. So this is tradable literally right now, right? We already have a swing low on the 4-hour as long as price can stay above 104,334. And you can see we actually had a little retrace and it held a higher low, right? We held right here. So what is that level? At 103,800. So it stayed above this low here and made another one. So that is where I would place my stop, or just right below that, not at that exact level. But right here is actually a good risk reward if you want to be aggressive. If you want to be a little more conservative, wait for the daily swing low. That's fine as well. There's plenty of upside. There's no need to rush in and be the first through the door. The other thing, so important, that's an important level. The other thing I would call out is the weekly chart. And so we just finished week 7, right? So we're finishing week 7, I should say. This candle is still to close in about 6 hours. Notice what this candle is doing. It didn't actually make a lower low below the low from the previous week, which is 102,105. We're just consolidating in here. Very bullish. Again, lots of options for areas where you place your stops, depending on how much room you want to give this thing to breathe. As I alluded to, I wouldn't be shocked to see price do something like this before we resume up, right? Right, that would catch a lot of people off guard, trigger a lot of stops. But right now we have the makings of a potential low, so we don't even have to get that low, but do watch out for that. And so another way of thinking about this is within a weekly cycle rally, you're still going to have daily cycle declines, and it appears that we're experiencing one right now. Maybe we just printed it. So that's something to watch. Those are your levels. Most importantly, we are in the final legs of the 4-year cycle rally, right? This is month 30. Previous cycle topped out on month 35. The one before that was also on month 35. Doesn't mean we're going to rally for exactly 35 months here, not by any means. But it tells you we're in the timing band, where we are later in that long-term cycle. So my expectation is that this weekly cycle rally may actually be if it's not the last, it's the second to last. We don't have many more of these to go. And so I want to make sure I catch a piece of this trade. So watching this for this daily cycle low very closely. So that's Bitcoin. Let's look at ETH really quickly to close out. Actually, before we do that, let's look at the ratio of Bitcoin to SPY. So on the weekly chart, you can see it didn't make a lower low yet, right? That's very positive, very constructive. On the weekly chart, we've been running for about 13 weeks. And if you look at the daily, we're actually just trying to print a swing low. So this is important because generally when Bitcoin is really ripping, it's outperforming SPY, right? This is a ratio of Bitcoin to SPY, the S&P 500. And so you want to see this in an uptrend when you're long Bitcoin. And we're about to start an uptrend. I hope you can see that visually. Look at that. If we can close today where we're at right now, or higher, obviously, we'll have a daily swing low in place. And again, that's your buy signal for Bitcoin. Looking at it on a longer term chart, this is the low since the Bitcoin. This is the last 4-year cycle low, and you can see we've just been kind of in a steady staircase up on the ratio chart. Let's look at ETH really quickly. So ETH in a similar position, looking for a daily cycle low. Look at this consolidation here after this big 3 candles up, big candle up, big candle up, big candle up, and now we've been consolidating for basically 22 trading days. Wow. Now, the low of that range is somewhere around the low 2400s. Like you can just see, all of this is just consolidation. I mean, look at these last 2 days. This is actually pretty remarkable. Look at these 2 candles. Like, incredible how there's almost no body. So it tells you there's a lot of indecision, given that this is a consolidation at the higher end of the range from this breakout. I'm expecting that this is going to lead higher. Weekly chart, similar situation to Bitcoin, but last 3 weeks have been consolidation. So this is what you're seeing on the weekly, monthly, daily chart. This is just a weekly representation. I mean, look at these wicks. And practically speaking, that means next week's candle will start as an inside candle. And the range is a high of 27.89 and a low of 24.70. It's a pretty big range. But again, the bias is absolutely to the upside. And look at the monthly chart on this thing. Look at that thing. Oof. This was an ugly move down for 1, 2, 3, 4, 5 months, and it looks like we're coming out of that. And this was your low for ETH. So it bottomed before Bitcoin. Bitcoin bottomed in the fall of 2022. This one bottomed in July. But just look at the chart. It hasn't really gone anywhere since then. So my sense is we can absolutely be in for the steepest part of the rally at this point. And similar to Bitcoin, I want to be here for it, right? Like, this thing it's almost a double up just to get back to the old all-time high, which Bitcoin has obviously made a new all-time high and this one hasn't. And if you look at the ratio of of ETH to Bitcoin, look at that monthly chart. Again, remember, first day of June, so we have a complete May monthly candle. Nice, beautiful swing low after a just ugly decline for many, many months. And on the weekly, we're just consolidating here. The same way the absolute chart was consolidating, we're consolidating versus Bitcoin again. This portends good things. The thing to keep in mind for this, there was a big fundamental catalyst. We learned that this company, SBET, just some kind of sports gaming company, they're doing the MicroStrategy thing. They're putting Bitcoin on their balance sheet. Look what happened to this stock. So we're going to be watching this one closely. I'll definitely keep tabs on this and other emerging ones. I'll try to do some videos for paid subscribers to keep people up to date, as I'm going to be watching this very closely. Huge opportunity here. Look what this thing did on Friday, Friday before Memorial, right, that was the Friday before Memorial Day, right? This thing had already made a big move up, so people were front running this. So it closed at 672, and then Monday we had or Tuesday, because there was no trading on Memorial Day, we had a gigantic gap. Look at the size of this thing. This thing gapped up what to, my goodness, a $20 gap. So increased like 3 or 4 or 5x. Like, what's the percentage increase on this thing? Let's just say from here to here. So 274% increase overnight. But most importantly, we actually got followed through on Thursday. So this was your Tuesday candle. And then the next day, we consolidated at the lower end of the range. And then boom. So once this thing broke above the high of this candle, so 32.80, it was off to the races. And then Friday, we made another higher high, but we closed as a red candle. So the low from Friday is $70.25. And so if price on Monday closes like something like this, then we're in danger of this being the end of the rally. This becomes an ugly swing high. But I think what's more likely is that this is actually just consolidating, and it's going to present an opportunity to get in here. And ideally, I'd love to see this thing retrace more of this rally. Maybe even, I think that would be a pretty big move down to get back down to around the 27 area. But a lower risk entry will present itself. And I'll definitely be reporting on this and other companies that want to start adding ETH to their balance sheet. If we zoom into the 15-minute chart, we can get a bit of a better sort of sense. So you can see this big candle on Friday, that was a swing high, right? This big candle at 9:30. Okay, so it was actually the opening candle on Friday. Once it closed below 102, which is the low of this candle, that formed the swing high, right? And so we made that lower low. We bounced above it, right? We actually closed above it, but could not hold that low. Made a lower low, had a little bounce, another slight lower low. And so at this point, a move like what I'd love to see is something, and this is your 15-minute chart, What I'd love to see on Monday is something like this, right? A candle that breaks below this low of $70 more or less, right? Like that, you can see this kind of cluster. Let's just even pull this back, right? Like it even goes back to here, right? Where price aggregated for a little bit. If we could break below that and then recapture the level, that is super actionable. And remember, this thing already got to 124. So getting in around 70, if it breaks below and then gets back up, ton of upside. The other thing I would keep in mind, this thing has a market cap of $53 million. That's it. So it could 10x and it would still only be $500 million. And their plan is to buy, I think it's $425 million worth of ETH. So if everything goes to plan, their market cap should go to at least that much, right? If not more, if the strategy becomes successful and they keep moving with it. So a ton of upside possible here. I'm going to be watching this pretty closely, as I said, but wanted to give you a little preview here. A lot of potential money to be made, and obviously long ETH as a whole. There's also leveraged ETFs like ETHU. So that's the picture for crypto. I wanted to spend a little time there. Now we can move on to broader markets. And as I alluded to, I think the S&P 500 has actually printed a swing high, is in a new daily cycle. Let's talk about the weekly first. So on a weekly level, we just completed week 7, but notice we're actually just inside the range of the previous 2 weeks. I'll draw these lines here so you can see them. Look at that. So the price action for the last 3 weeks has been inside this range. So a high, again, this is SPY. So a high of, and all the indices are doing the same thing. A high of basically 495 and a low of 577. So like a $20-ish range, something like that, just kind of bouncing around there. Based on the way this candle closed last week, we're going to be an inside candle next week within an even tighter range. So a high, like you look at this candle specifically, there's a high of 593 and a low of 578. I suspect this, so next week we're going to start week 8. So we're rallying in this weekly cycle. Just for context, the previous weekly cycle, right, like that topped out, let me just get this out of the way. That weekly cycle topped out on week 5. The one before that topped out on week 17. The one before that, week 13. So this week 5 high was very bearish, atypical. And I would expect that we probably get a high in the double digits this time around. So like week 12, week 13 at the very least, similar to this, assuming it's a short cycle. So plenty of time to run. If you look at the daily chart, right, we had this run up to day 29 and then we formed a swing high. So this was your high. And then once we broke below the high of this candle here, which is the low, of this candle, which is 588, that formed a swing high. So we consolidated the next day and then we closed below that level and then we continued and then we made another lower low. This candle now marks our low and we then got a big, beautiful hammer to follow through the next day. And since that hammer on Tuesday, that was the day after Memorial Day, of course, we've got, positive news with the thought of like the tariffs potentially being unconstitutional or what have you. But now we've just consolidated the next few days, right? So this basically went nowhere on Wednesday. Thursday also did nothing. Friday, importantly, we broke below the low of Thursday and Wednesday, which is basically a false breakdown. And so that is actually very bullish. My read on this is that Friday was day 4 of a new daily cycle. So this daily cycle ran for 29 days, and then it had a very short, shallow decline into a daily cycle low here. And since we broke above this candle's high, so that's 581, right? Like that's this line here, which we broke above it very significantly. That was your daily swing low and your daily cycle low. And notice the low on Friday actually came back to this level. It didn't quite get there, actually. It didn't quite get there before reversing higher, which is bullish. Like sellers couldn't even bring it back down to the swing low level. It stayed above it. Said a different way, not to belabor the point, this is a higher low than this low, which is a higher low than this one, which is a higher low than this one. What is this one? It's a higher low than this one. think about it really simply. We're making higher highs and we're making higher lows. This is a higher low. That's important. Don't overthink it. This candle, the range here, is a high of 591 and a low of 583. So we're going to have to break above that 591 level to be in business. But you wouldn't need, like, there's no need to get nervous until we break below the low of this candle. That's still quite a ways down from here, but don't get chopped up here. The other thing, just kind of notice what happens in daily cycle rallies. You get the initial swing low. Like this was this was the bottom in April 7th, on April 7th, a pretty extreme case. But you got your initial swing low here, and then you get a retrace, and then you continue on to new highs. Look at this daily cycle. And this was a very bearish one, to be fair. You got your swing low, right? You got your swing, and then this was like your little retrace, right? Your little retrace / consolidation. Then you make your higher high. This was very bearish, so it collapsed and made a lower low. But this is the same pattern. Look at this. You made your little swing low here. You get your rally. This is your retrace. And then you continue to consolidate. You make a slightly higher high. So these last two daily cycles were pretty bearish because we didn't make much progress before getting our DCL. But you notice that pattern. You make your swing low, and then you get a retrace. Here's another one, right? This is your swing here, a big gap, and then you get your retrace. You continue higher. Right? Like this is a pattern that price does, right? This is your little swing low here. This is your retrace. This is your little swing low here. In this case, this was a very violent rally. We didn't get much of a retrace. We don't always get one. But look, this is your swing low. This is your little retrace / consolidation. Sometimes price is so bullish, it doesn't even, you don't get a really strong retrace. You just get a consolidation. So look at what's shaping up here. Maybe this is your little retrace / consolidation after this swing low, setting up for higher highs, new all-time highs, price discovery. So that's my read on it. It's not a prediction. It's an expectation. It's how I'm playing it. Another way I would say is when I start to see a pullback, instead of looking for opportunities to get short, I'm inclined to look for the next swing low to get long. That's the way I would think about it. The bias is to the upside. The other thing to pay attention to is this 10-day moving average. That's what this line is here. Notice this closed below it. Another good sign that this was probably a daily cycle low because we did close fully below it. In fact, we actually closed below it 3 days in a row, right? Like this was the first day, then the next day. And so the fact that price closed right above it on Friday, again, very, very positive sign. This has the character of something that is just consolidating / retracing before a move up. Do note that the non-farm payroll, the jobs report, is coming this Friday, and so that's going to be a big catalyst for the market. That would be the next really big thing. But I'm looking for an up week given this setup here. Again, you want to see this thing break above 591 on the daily chart. And the other thing I would just note is that this thing still hasn't made a lower low on the weekly, right? That low is 577, right? And also note that that's a gap on the weekly. Since we gapped up on Monday, it created the gap on the weekly chart. And finally, the monthly chart, probably maybe one of the most important things here. Look at this big, beautiful swing low. Keep that in mind. If you get nervous, if you start to feel a little uncertain, look at the big picture. Look at this gigantic wick. How many people got stopped out here? How frustrating that is to be a person that sold here or here or here or here or here. You're just looking for any opportunity for the market to top. You're biased, right? You're like, man, that's fuel for a move higher. This has all the makings of something that's going to make another all-time high. This is a beautiful looking chart. And if we flip this to the quarterly, again, I'm expecting that this candle becomes a bullish outside candle by making a higher high above here. And so we made look at how many, we broke below this low, this low, this low, even this low. We took out a lot of potential stops, right? This was very scary. And so you would expect it's going to finish the job and make that higher high, in this case, a new all-time high. And I expect this pattern to play out across all markets, all the other indices as well. So let's look at those other indices, look at those levels. We'll go a bit faster here because it's all the same patterns, they're just different levels. So for QQQ, so QQQ didn't quite close green, but it's the same idea. So QQQ, the low on Friday was, call it 512. The high was 520. 520.68, $520.68. So you're going to want to see this thing break above that. For the Qs, we actually made a higher high above. Like think about, remember for the SPY on the weekly, we've been consolidating inside this same range. QQQ actually broke above that range, but it then pulled back. That's important. That tells me this thing is trying to lead SPY, trying to lead the S&P 500, which is bullish. That's what you want to see in a bull market. QQQ is going to outpace SPY. And so same kind of idea, monthly candle. Look at this big, beautiful swing low, expecting more price discovery. And so on a sort of lower time frame, you look at the 15-minute chart. Your first line in the sand is these lows here. So you want to see price hold above 518.44. And in fact, I'd love to see Monday or earlier in the week, something like this, right? This is a very tactical entry. This is a 15-minute chart, very, very low time frame, but this is the kind of thing you want to see. This was a very strong rally. You want to see some little retrace because that's the thing. Every rally gets retraced on some level. Sometimes it's a really strong rally and you only get some consolidation. And sometimes you get an uglier move down, but you want to watch for that retrace because that's your sign that it's ready to resume up and that's your lower risk entry. So I'd love to see something like this. So a break below 518.63 and then a recapture, right? So I want to see something like this and then something like this, right? Just to be like crystal clear, that's your long entry, this, right? Like you want to see the thing break below this low, but then you need to have it recapture, right? Because if it breaks below this low, there's nothing to say it's not going to then do this and then continue lower, right? You want it to prove itself that it's going to recapture that level, and then you can get in. You can set a buy stop, all kinds of ways to trade that tactically. And if we look at the ratio of QQQ to SPY, we're seeing on the weekly we're still rallying. On the daily chart, we were red on Friday, but it's a hammer, and so that's a good sign that this wants to break above there. So we'll be watching that again, just for extra signs of the market strength. What about the Dow? So the Dow closed green. That's a positive sign. On the weekly, it's an inside week. The range that we need to break out of is a high of 428.66, $428.66. And the downside is $413.83. You want to stay above that. And we actually have an even tighter range because last week we had a high of $424.83 and a low of $418.58. So that 419-ish area, 418 and a half, that would be my downside risk essentially. And you want to see this thing ideally break out above this candle first. And then that's your move, your sign that we're probably going back to all-time highs. That's the Dow. The Dow also closed with a monthly swing low, but much, much less emphatic. So the level that we needed to recapture for a monthly swing is $423.12. And so we're below that level as of Friday, right? So we got to get back above $423.12. Call it $423. That's important. Again, looking at SPY, that's what you want to see. You want to see price trade appreciably above this line and hold there. That's your positive sign. But right now, everything suggests that this is some kind of bottom that's going to last for a little bit and that we're probably going to go up, make new all-time highs, get into that price discovery mode. What about IWM? So IWM also closed with a monthly swing, just slightly though. So IWM is still kind of in an inside range on the weekly. So it needs to break above 209.76, so $209.76. You want to watch that it doesn't break below $203.54. That's the low from last week. That would be something like this. We want to avoid. That would be a signal that this thing is not ready to make all-time highs. It is definitely lagging the other indices. That's not super auspicious. On a daily level, similar pattern to SPY, made a lower low, potential false breakdown here. It's setting up an inside candle for Monday on the daily chart, just like it's an inside candle for the weekly potentially. So that that range on the daily chart is a high at $206.25 and a low at $203.54. So, something like a $3 range. That gives you very clear levels you need to break above, or if you break below them, that's your warning sign to the downside. I would also note that this gigantic trading range that we've been in, we're basically back inside that range. And if you look at it on a monthly chart, we're like just above. This was a really nasty consolidation range that we broke above, then broke back into. And so very important that we hold these levels here, but also very bullish that like we tested this consolidation range and price rejected it. That's what this wick is here. It's rejection. So that's IWM. What about SMH? So SMH made a bigger lower low than the Qs and SPY, but you can notice this is all very similar patterns. So for SMH, the Friday candle is a low of $235.37. So that's your risk level to the downside. The high is $243.23. So you need to break back above that. Just to be clear, you've got to see something like this on Monday or earlier in the week. But I suspect we're going to get something like that. I suspect the market will drag this thing back up. On the weekly candle, again, same pattern. Did not make a new low on the weekly. We're staying above this. So that's a low of at 234 level is this line here. But do notice it is a gap. This is a common pattern that we see across the indices because we gapped on that on a Monday. And so that creates a gap on the weekly chart, which still has not been filled. It probably will get filled when we get our ICL. I don't know. Depends on how much higher we go from here, I suppose. But on the weekly, we are set for an inside weekly candle. And so we'll see what side of the range price wants to break. That weekly candle has a high of $249.21 and a low at $235.37. So that is the picture for SMH. I like this one. What about Dixie? So and SMH closed with a monthly swing low as well. I mean, just when you look at this chart, this is just a thing of beauty. Also keep in mind, I don't want to belabor the point, because I mentioned this before a few times. SMH actually topped out back in July 2024. So it's been declining / consolidating for longer than the broader markets. So this looks like an even more legitimate long-term cycle low, right? Like this is your cycle. That's your top, and that's your bottom, right? A 30-month cycle, a 30-month cycle that had a top on month 21, right? That is absolutely that's a very believable pattern, right? Like that makes sense. Like that's what we might see for a long-term cycle. And so again, I really like this one for a long-term bottom. That's SMH. Moving on to Dixie. So Dixie is declining in a weekly cycle. We had our top on week 3. We just closed out week 5. We're setting up for a weekly inside week. And so that's a high at 100.54 and a low at 98.69. And that's important because if we break below that 98.69 level, right, like that's this here, right? Like you can see this cluster of lows. That is our gateway to new lows, to breaking below 97.92, which I suspect we're going to do eventually, because it does look like we're in a longer term decline. Look at this monthly chart. We had that big high back in September 2022, this waterfall decline, and then basically a sideways consolidation. We do have this important swing low back in July 2023 that led to this small, tiny rally, and then a big retrace that didn't make a lower low that held. It tried to rally again, and what happened? It got slammed down. Again, didn't make another lower low. Tried to rally again, and then what happened? That's right, it got slammed down again. Like, it's starting to look like a familiar pattern, right? Tried to rally here, actually made a higher high here, faked people out on month 18 from this low here. And so I suspect this was a long-term cycle low, and this was actually a new cycle, a very frustrating one where we made this high, made this low, made this high, made this low. This is just a gigantic range. And then it finally made a higher high, getting like, oh my goodness, this thing is going, it's going, right? Nope, it's not. We've now made a lower low. That said, super, super, super important and like just kind of unambiguous. If price can break back above this high, this low here, so call it 100.91, right? Like imagine a monthly candle that does something like this. That is hugely significant, right? Like that would be, you wouldn't expect to see that if this thing is going to go on to make lower lows. Because right now, this has all the character of something that's going to go and break this low. And if we do break this low, my sense is we find ourselves somewhere around here, right? Like somewhere like here, right? Now you can see price aggregated in this zone for quite some time, right? You have all these wicks, and so you can easily see yourself again, like call it the mid 90s. More importantly, this is only month 22, right? This low came on month 30. This one came on month 35. This one came on month 45. These cycles tend to be long in terms of time. So we probably have quite a bit in terms of downside. So think of like through the end of the year, which makes a lot of sense. If Bitcoin is in its final ascent to the 4-year cycle high and gold is in its final ascent to the 8-year cycle high. We'll talk about gold in a minute here. So that's my read on Dixie. So week 5 of a weekly cycle, but it's already in decline, which is to say we have several more weeks of downside, which factors into this monthly chart, right? Like, well, that's going to be more months of downside. And if you think about the daily chart, we may have made a daily cycle low. Let's see here. So this was your high on day 15, and we so far have a high, low here on day 25. Now, I would expect that this would be a left translated daily cycle. So since we rallied for 15 days, I would expect that we're going to decline for more than 15 days. This big, ugly, bearish outside candle is a hint that we probably are going to make a lower low below this low, continue that weekly cycle decline, but also continue the daily cycle decline. And so I suspect this is not a daily cycle low. It could be, it absolutely could be at day 25, but also possible that we're still in this daily cycle and about to roll over again. Now, even if this is a new daily cycle, it doesn't really matter because all the evidence we have suggests we're in a weekly cycle decline. So if this is a new daily cycle, if nothing else, it's an opportunity to get short again. I would expect we don't get back above this high here at 100 spot 54. So it makes things really easy, right? If price can break back above this, all right, probably not right to be short. If price can get back close to here, doesn't quite make it and turns down, golden opportunity to go short. UUP is the ticker for the ETF that tracks this. Puts on that or something like that could work well here. That's Dixie. 10-year, big update on the 10-year. So we made a new higher high on the weekly cycle the week before last. So you can see, and we talked about this last week. And what did we do? How did we close Friday? We made a lower low below that weekly candle. So the week of May 19th, we made a high at 4 spot 63, and that candle has a low at 4 spot 43. Last week, we closed at 4 spot 40, so 3 basis points below this low. That is really important because the implication is that this weekly cycle is over. Or, excuse me, the possibility is that this weekly cycle rally is over, right? This candle is what created a massive swing low here, right? By crossing above the low of the high of this candle, which was 4 spot 26. This big candle made a swing low. But then all price did was consolidate inside the range of this gigantic candle. Look what it did the following week. Red, but consolidation. Then the next week, another red candle, but not really going anywhere. Then we make a lower low, but stays above this low here. In other words, not to belabor the point, this is a higher low. That's important. We then go on to rally for 3 weeks, which looks bullish. We make a higher high above this candle. So we finally, in other words, we finally threaten to break out of this gigantic range. But then price pulls back pretty aggressively and closes as a weekly swing high. So this is going to be a really important one to watch. And it makes the levels super simple. Has to cross above 4 spot 43 to invalidate this weekly swing high, which the implication is that this weekly cycle rally is over. And remember, the Dixie, we know that that's declining into a weekly cycle low. The 10-year and the Dixie have diverged to some degree. And so this would kind of put them back in line with each other in some sense. Like they would both be declining in the weekly cycle at the same time. Not the exact same count by any means, but we at least have similar timing. So definitely something to watch. On a daily level, the implication here is that this was your daily cycle this was your daily cycle high at day 33, and we are now on day 38. So that is actually, you think about the way those things interact. That's actually kind of positive because we're late in this daily cycle, and so we could get a daily cycle low in the next week or two, and that would mean this weekly candle would start to rally. Because the thing to keep in mind is we're still at the upper end of the range of this gigantic candle. So as long as we stay, I would say, basically above this line here, so call it 4.29, anything that happens here above here, even if we get another lower low, like, let's say like something like this, that could still just be consolidation, and we could still make another higher high above this week 7 high. So again, as always, you've got to be nimble. You've got to consider the different paths that price can take and just think about the probabilities. So that's the US 10-year. Oil, very quickly, we've been consolidating since the April 7th low in this gigantic range. So a high of 63.87 and a low of 55. Not much else to say. That's what we've been doing here. So it's not even clear that this is a weekly cycle low anymore, because we've got to break above $64 basically for this to be his weekly cycle low. And so as I think about this, right, like that's your high here at week 18, your low here at week 30. Yeah, there's not much signal here, right? Like, again, as long as price is within this range, there's not a whole lot to do here. And on the daily, you can see this does have the makings of a bull flag off of this move here. And so very clear line in the sand on the daily. You want price to remain above, call it $60.27, $60 and a half. Break below here would not be good news, but what you'd love to see is something like this, right? A break below this low, this cluster of lows, take out some stops, and then price is off to the races next candle. Your entry would be on at the high of this candle, wherever it happens to be, right? Like that's what you would want to see if you want to play this bullishly. This is more of a no touch for me. There just isn't a ton of signal here. That's oil. TLT is going to be moving inversely to rates. We talked about how rates just made a weekly swing high, so no surprise. TLT just made a weekly swing low. Important context here. We're in weekly cycle decline. We topped out on week 11. That swing happened on week 18. So it is possible that this is a weekly cycle low. We did break below this weekly cycle low here as well, right? Did we? Yes, we sure did. So that's the other thing. This has the makings of a double bottom / false breakdown. So once we traded above $86.12, $86.12, that gives you a weekly swing. I would be cautious here because week 18 is very early for a weekly cycle low. Crazier things have happened, so it's possible. What's more likely is this is a little retracement, a little bounce within the weekly cycle decline. And if you look at the daily, what we really have here is a daily cycle low. So this daily cycle topped down on day 11, and it bottomed on day 28. So we're now on day 5. So I think this is a similar count to the broader market, like a SPY, for example. And so on a daily level, a break below 85.88 would be your warning sign that this daily cycle rally is over. My expectation would be that this daily cycle is going to be left translated. It's going to be short, kind of similar to how this was a very short rally. I mean, I guess really this whole thing is a rally. Like how many days did this last? That was 11 days. And so we're at day 5 here. So your first signal would be a break below 85.88, which is this candle again. So I'd be cautious here. That's TLT. TBT doing a very similar thing. Almost made a weekly swing high, kind of like rates. So it has to break below $37.14. Hasn't quite done that yet. On the bullish side, a break above $37.47 would leave you with a daily swing low. and potentially a potential daily cycle low here. Again, it's kind of a similar, like wet rates are kind of late in the daily cycle, the 10-year, I should say. And so it makes sense. This thing is going to have its daily cycle low at the same time the U.S. 10-year Treasury does. All right, we just have a few more to go here. We'll look at precious metals and then we'll close this out. So gold topped out on week 16, and it's just been consolidating since then for 1, 2, 3, 4, 5 weeks. The swing high was active below 3,260, and we're now back above that. That's very important to note. See that that's your swing high right there. And equally important to note, look at this wick on price. I don't think this is a coincidence, right? Like look where price reversed, right? Like look at this wick. Right where this weekly swing low is, right? Like price broke below that level, or excuse me, swing high, and then it bounced, right? Price rejection below that. That is really bullish. I think gold is now going to move into its 8-year cycle high through the end of the year. And so at some point, you're going to have to take profits, but we're probably starting our march to 4,000. My guess would be 4,000, a nice round number, a nice round psychological number. Maybe we get close and we don't quite make it. But my guess is this was your weekly cycle low, and we now just closed out week 2. What you want to watch for is a break below 32.45. That would be your signal that the weekly cycle decline is still in play. The good news is, even if that is still the case, we're now super late in the weekly cycle. So this is week 17, 18, 19, 20, 21. Tomorrow, well, not super late, but next week would start week 22. And so you're still closer to a low than you are not. And so this is still bullish any way you sort of slice it. At some point, you'll have to take profits. I don't think now is that time. And look at that month. Look at the monthly candle, right? My God, it's just an inside candle at this point. The way the May candle closed out, and that is a range with a high of 34.38 and a low of 31.20. And so my sense is this doji monthly candle that's just inside is just consolidation setting up for a higher high for the next leg. Just like these two candles were consolidation and this candle was consolidation and these candles, you have like price needs time to kind of catch its breath, if you will. So that's gold. What about silver? Silver has been very, I would say you really want to wait for gold to give you the very clear signal. But the implication is that silver is also on day 10, just like gold is. For silver, we've been consolidating here in this cluster since Wednesday, May 21st. You want to stay above, actually, let's zoom in here. Look at this larger daily candle. So this daily candle is actually a bearish outside candle, and the low of this candle is $32.62. So you want to stay above that candle, and the high is $33.70. What you'd love to see is a break below that, something like this. Run some stops, right? And then your entry would be once price breaks back above that high, and then you're kind of off to the races. I don't know that we get that perfect entry, but that's what you want to look for. That's the way you de-risk your entries, right? You get in right after the trap has been set, right after the swing low has printed. And we look at GDX. GDX is actually looking pretty strong here, stronger than gold itself, which is usually a pretty bullish sign. So this is the top for GDX on week 16, similar to gold. The weekly swing low for that, or weekly swing high for that, would activate below $47.77. Notice how price is way above that at this point. I have this line here to illustrate. Look what price did. The week before last, a nice big green candle. And then last week, just consolidation at the upper end of the range. So the low from last week is 49.34 and the high is 50.84. Very simple. You want to see price break above that high and sustain it. And any break below that level is your warning sign, unless we get a quick recapture, which is actually a great entry. But this is a really bullish looking sign. I mean, it's like, when was the last time you saw GDX in the 50s, right? Like, that's really positive to see. And similar to gold, May closed out as an inside candle, but unlike gold, look at this. Look at there's actually a body to this candle, right? Like, that's bullish, right? People are getting into the miners. And if we look at the ratio of miners to gold, we can see that we are, this is the ratio of GDX to GLD. You can see, as we think about a weekly cycle, we just made a higher high last week. So this was a very bullish week. And we're looking to try to challenge this high here. And bigger picture, we're still kind of down in the dumps. We've got a long way to go. Miners could outperform gold for a really long time to come, and it would just be mean reversion. So miners might be the way to play this rally in gold into the 8-year cycle high, actually. And finally, natural gas. So natural gas is not looking great. It looks like, in terms of the daily, we just printed a swing high, like this big bearish outside candle. By price breaking below that, so below $3.24 is a swing high. And more importantly, this is a swing high that's lower than this swing high, which is lower than this swing high, or this swing high, and this swing high. Said a different way, we're making lower highs and lower lows. Not a good sign. We need to break on a daily chart. We need to break above 3.28, right? That would be something like this. We'd love to see that. That would mean this becomes a swing low. And more importantly, this swing low becomes a higher swing low than this one. That would mean we start to reverse the pattern, where we start to make higher lows instead of lower lows. So that's the level for natural gas. And on a weekly chart, you can see we didn't form a weekly swing high, but what we do have here is a potential compound bearish outside weekly candle. We talk about this all the time. It's such an important concept to understand. So notice last week's candle made a higher high above the previous week's candle. So previous week's candle was a high at 3.48. We made a high at 3.51, but then we reversed and went red. But we didn't make a lower low. We ran out of time. So my suspicion is we're going to make that lower low next week to close the job. And so then this candle and this candle combined become a compound outside candle of this one. So when you put these two candles together, they make a higher high and a lower low than this one. Sometimes that happens. Price just runs out of time on one time frame and then finishes the job on the next. So you want to be watchful for this, that this is a candle that didn't get to go outside yet, and so it may not be finished. Conversely, the low of this candle is 3.16. If price can hold above that level, like that becomes your risk level, is when we're inclined to play this long. I would not, because we're in a downtrend. I think that's risky. I would wait for price to prove itself with a swing low, maybe even on a lower time frame. But that's your level. That's your state of play. So those are all your tickers. I know this was a longer one this week, but important things happening. Wanted to make sure we got into some detail. And as I mentioned, I'll put out some videos on some specific tickers like I did last week. Because there's a lot of upside beyond just these sort of standard tickers, but this tells you the general direction that things are moving. So that's all we have for today. Thanks for watching.